Nigeria's economy grew less than anticipated in the third quarter as painful reforms instituted by President Bola Tinubu weighed on the non-oil sector, which expanded at its slowest pace since 2021. This is according to data released by the National Bureau of Statistics on Friday, which further revealed that gross domestic product expanded 2.54% in the 3 months through September from a year earlier, compared with growth of 2.51% in the previous quarter. The median estimate of 7 economists in the Bloomberg survey was 2.85%. The non-oil sector expanded 2.75% from a year earlier, compared with 3.58% in the prior 3 months, its slowest pace since the first quarter of 2021, while the oil sector contracted 0.85% as production increased to 1.45 million barrels per day from 1.2 million barrels per day a year earlier. Now, to further discuss this, I am being joined by an economic financial market analyst, Oladipo Ajayi. Good morning, Oladipo, and thank you so much for joining me this morning.
Good morning. Thank you very much for having me on.
All right, so how do you assess the effectiveness of the reforms implemented by the president in terms of their impact on the non-oil sector and also the overall growth of the economy?
Well, if we need to actually start from the overall growth of the economy, at the beginning of the year, a lot of people were expecting a better performance for the year. Even what Bank IMF actually estimated Nigeria will grow at an average of about 3.2. Of course, they came back later to actually revise down to about 3%. But based on the current trajectory, I doubt we can actually hit that mark. And sometimes last month on your program, I mentioned that GDP figure for Q3 will actually print around 2.5. And my view was premised on the impact of the new policies that was actually introduced by the new administration. Of course, we expect the policies to actually give a better output in the medium to long term. But we expect more like a negative impact in the short run, and that's exactly what we are seeing. Because when you look at the non-oil actually grew by about 2.75 compared to 3.59 with what we saw in Q2 and about 4.27 with what we saw year on year. That's about this time last year. So it simply means that the policy on ground has actually impacted business aggressively, and that in turn has actually affect the overall growth of the economy. But when you look at what happened in the oil and gas sector, we have seen more of an improvement. And just like what you mentioned when you were actually introducing the news, the average production for Q3 was 1.5 million. Compared to the 1.22 million that we saw in Q2 and about 1.2 million that we saw Q3 last year. So it simply means that the oil and gas sector is actually performed better than a lot of people would have anticipated. But the slow growth and the lowness that we saw in the non-oil sector actually further depressed growth.
All right, so but what would you say are the key factors that contributed to the slower growth in the non-oil sector during the third quarter, and how do you see this trend affecting the country's overall economic outlook?
Of course, if you can remember vividly, it was at the inauguration of the current administration that the new president mentioned the removal of subsidy, and at the same time also the harmonization of the FX windows. And if you understand very well, if you look at the books of most of these manufacturing companies, a lot of them actually posted huge exchange loss. If you look at an average, if you pick like the key 5 manufacturing companies in Nigeria, I think the 5 of them posted over 400 or something billion naira loss in form of exchange loss. And this has actually impacted their business aggressively, and in turn will also affect the growth of the economy. And at the same time also, a lot of these companies are now finding it very difficult to actually pass the full cost of their production to final consumer. So it simply means that one way or the other, they would have taken a bit of loss in terms of the increase in cost of production. So as a result of this, you also expect this to actually affect the overall economic output, and that's exactly what we saw. So for me, I think the current policy, like I mentioned, in short run, it will have like an adverse effect on the economy. But in the medium to long term, the economy would have adjusted and we'll start seeing the positive impact of this policy.
All right,
Removal of subsidy is good for the government.
Oladipo, while you're actually still talking about that, I would actually love for you to tell us to let us know what you think with the oil sector contracting while production has actually increased. What are the potential implications for Nigeria's overall economic stability and its diversification efforts?
Well, if you look at the oil sector, I think it has improved from where we're coming from. Sometimes last year we were producing just 900,000 barrels per day on average, and but now we are currently at 1.5 million barrels per day. And the Kiari actually mentioned recently that the focus is to hit a 2 million barrel per day mark by the end of the year, which is simply like about 30 something days from now. So it simply means that the government on their part as well is actually working aggressively to actually improve production and ramp up production. And when this is done, this will actually have a positive effect on the economy. It simply means that the current depth of FX liquidity in the system will actually, the central bank will have more muscle to actually provide liquidity to the market. And as a result of that, we will likely see stability of Naira than what we are currently seeing in the market as to speak currently. So in sum, you look at it that we are currently on a moving train, and the right thing is to say is that I think we are moving on the right direction. Because when you look at where we were before and where we are currently, it simply means that the government are actually putting everything in place to ensure that we increase production. On the part of the diversification of the economy, as we speak, close to 90% of our FX revenue is still coming from the oil sector. And that's one of the reasons why the government is actually focusing on that, to actually now use that to actually develop other sectors. We saw what happened in the agricultural sector. We didn't see much of an improvement in the agricultural sector compared to what we have seen in the past.
All right, Oladipo, sorry to cut you off there. You did talk about the government doing everything it can to make sure that we increase our oil input. But then, given the lower than expected GDP growth in the third quarter, would like for you to recommend or share with us your recommendation of what policy measures or even adjustments you think would stimulate economic growth and address the challenges faced by the non-oil sector?
Well, I think for the non-oil sector, currently we are in a very tight monetary regime. Interest rate is off the roof. Most companies are finding it very difficult to actually access loans at a cheaper rate. It simply means that the government needs to actually create a window where they can create funds for manufacturing companies to actually access at lower than what is currently obtainable in the market. Because most time, cost of finance is also a big cost when you look at production. And if the government can actually find a way to actually resolve this, it, to some extent, will improve activity in that sector. And so also, like I mentioned, FX liquidity is also very key. Most of these companies are finding it very difficult to actually access FX. And as a result of that, they are not producing to capacity. Imagine just sometime last month, the Central Bank of Nigeria actually moved the 4 trillion line item back to the willing buyer, willing seller window. So what they are trying to do is to actually reduce the pressure on the parallel markets and move all pressure into the NAFEM window. But as we speak, the central bank is not providing adequate liquidity in that window. So it simply means that most of these manufacturing companies as well are not actually getting enough allocations. So when you're not getting enough allocations, it simply means that you will not be able to produce to capacity, and as a result of that, it will actually affect the overall performance of the economy. So the government also needs to actually work in this dimension to ensure that they create a market that's actually very liquid. where manufacturing company can actually assess effects as a when due, where service company can actually assess effects as well as a when due, where even consumers, which is more like personal company, individual, that actually want to pay for school fees, want to pay for medical tourism and all the likes, can actually assess effects as a when due. And when this is done, what it will mean is that it will increase the activity in the economy, and at the same time will better improve the level of GDP growth for the economy.
All right, well, very interesting ideas there. But thank you so much, Oladipo Ajayi, for joining me on the news this morning to discuss this.
You're welcome. Thanks for having me on.